Hi everyone, and welcome to Loft Bitesize Broadcast. Today we are talking about the budget and what it means for the sector. I think, given the feedback we've had about the budget, we'll probably talk about what isn't in the budget and what we would like to have seen in the budget. I'm Danny Sutcliffe, founding partner of Loft, and today I'm joined by two titans of the housing world. Pat Hayes, who is the Executive Director of Regeneration Housing Environment for Slough. Pat has been there for 3 years, I believe. Before that, Be First for 5 years, and before that, Ealing for over 10 years. So the thick end of at least 20 years working directly delivering homes for local authorities. I'm also joined by Paul Nicholls, who is Wates Managing Director of London, which he's come back to. Before that, he was at Real and he's been at United Living and Wates previously. And they say never go back, but from what I'm hearing, it's going really well at the moment. So, and you've been within the contracting sector for over 20 years, haven't you? I think we first met 25 years ago at the Housing Forum, didn't we?
We did.
Yes, which is still going strong, and everybody should be part of the Housing Forum. Couple of housekeeping. If you have any questions, put them in the chat rather than a Q&A, because it's much easier for us to then have a look at those. And if you see me looking up like that, I will be looking at those questions and we will bring those in. So let's start with kind of introductions about what's kind of in your intro at the moment. What are you looking at the moment? What's Wates doing at the moment?
Sure. Thanks, Danny. Hello, everyone. So I'm very much a Wates residential. So our portfolio of work is all London based, and it's either contracting for third parties or investing in homes. Most of it is in partnership with local authorities and housing associations. And like everybody else, it's been a pretty challenging time, to be honest. I think with all things considered, we're having a relatively good year, certainly in terms of planning and getting schemes through the system. We've seen improvements there. We're seeing new opportunities, particularly with the local authorities. And hopefully there's some positives for RPs that will come back in next year in line with the next funding round. What's in my in tray? There's one word, and there's quite a lot about it really. And when I looked at the budget, I'm not sure it helped. What's in my in tray is how to make schemes viable. And I know that sounds like a big moan and everyone says it and that, but at the end of the day, we're not building in London, and we need to get stuff building and we need to get stuff moving. And it's really, really challenging for all parties to get things moving. We've seen 4 or 5 years of construction increase. I think we're nearly 40% up on pre-pandemic. We've seen a flat, and I would call it declining sales market. We've seen increase in interest rates, and the investors that were coming in around build to rent and things like that are active outside London, but certainly not very active in London at the moment. And it's really, really challenging to get things going. We've got a wonderful pipeline. We've got really good partners. We are getting things going, and we've got a good relationship with GLA, etc. But when I was looking at the budget, I was thinking, how is this going to help London deliver more homes, I guess?
Great. And I think there's a couple of points that we'll pick up on as we talk through this. So Pat, what's going on down in Slough?
Yeah, I mean, it's a game of two halves, I think, as people would say. I mean, on one side, there's, good development interest. We've had Berkeley Homes acquire our main shopping centre, which really will be a game changer. We've got Homes England and Muse taking forward another big site. We've got a lot of other interest in smaller sites. So, and a positive story around house prices and growth in many places. And obviously, really good news around Heathrow. Our challenge there is to really make sure that Heathrow expansion delivers, in want of a better word, good growth around it in terms of real opportunity to deliver homes and jobs and really create a decent environment like you have at Schiphol around Heathrow. So some really positive news for us. I think sitting right on the London boundary has lots of disadvantages. We don't have access to GLA funding and TfL's transport services in the main. But we do have some other advantages around ability to control our own planning destiny entirely, set our own Section 106 level, we haven't got mayoral seal, etc. So, some real positives. The downside for us is our massive temporary accommodation problem, which is the thing that I get the most grief about. We have over 1,000 people in temporary accommodation. It's costing £33 million a year. And that's just money paid out to landlords or money that we're paying to property developers to lease buildings off them. The main budget challenge for us is, we're a place which is already very stretched in cash terms, very deprived borough in terms of demography. But we're still getting LHA grants at 2011 levels, and that was only 90% of 2011 levels. So the budget gap for us on temporary accommodation is about £22 million a year. And you just have to keep rolling that forward. And so even if we achieve our target of getting the people in temporary accommodation down to 900 odd, we're still losing between 11 and 14 million a year. So that is the big housing challenge for me. The other one actually is getting landowners of vacant sites to bring their sites forward and sell them to developers rather than just holding them. The other one is around the Fire Safety Act and people coming in going, oh, yeah, I want to bring that site forward, but I only want to do 6 stories. So you're actually losing delivery potential there and other schemes just banked up waiting. People come to me and say, how long till I get planning? I go, don't worry about planning, mate. You'll get that in 12 months, but you still won't have got through the first gateway for your building safety. And those are the challenges for us.
And was there anything in the budget at all which kind of helped with any of those challenges that you're seeing?
To be brutally honest, not very much. I mean, it's again a budget which will take, a fairly neutral view for us, I think. Some of it might help the housing association sector. One of our challenges is that the housing association sector aren't able to do much and aren't doing much. We're lucky that a couple that operate in our area still are fairly active and got the money to be active. So, access to the investment bank and hopefully better news on rent convergence for them will help them. It won't help us particularly. And I don't think there's a lot in there. There's a little bit around employment training and skills. Regional mayors discuss complex issue may or may not help. And the danger for us is that, we're on the edge of what could potentially got a large mayoral authority, and we're probably the only urban area plus a couple of others in a predominantly rural area. So that's a definitely double-edged sword.
And Paul, was there anything in the budget that you saw that's going to
Danny,
do the issues that we talk about, which is like viability?
Yeah. I'm an optimist.
I do, yes. As I am, yes. I think you have to be in development, don't you?
Yeah. And there was nothing worse. I think the one thing that will affect us continuously is build cost and inflation, and increasing any tax, unfortunately, puts up build cost, particularly in our sector, particularly with our supply chain. So when we're looking at increases in national insurance, or we're looking at even the minimum wage, which I'm a big supporter of, it still pushes up costs. So when you think you're trying to squeeze costs and increase value, it doesn't help. But there's some good funding in there for apprenticeships, and we need more people in the industry.
Yeah.
A lot of support for that. We don't do the carbonisation, but other parts of Wates do. They're prepared to look at PFIs or PPP deals to get homes greener and leaner, which is what we need to do. There's a commitment to further reform planning. I think actually that has been one of the positives over the last couple of years in London, the planning improvement. And there is the temporary accommodation crisis that Pat touched on. Actually, for us, we have a modular offering, and it does seem to have some traction and some interest from the GLA and authorities. So when I put my business hat on, that is an opportunity for us to grow that good temporary accommodation offering that we've got there. So there are some, but I was hoping for something around sill relief, particularly in London. I was hoping of something around encouraging shared ownership or help to buy or anything that stimulates the market. I was even wishful around some stamp duty holidays, because I do appreciate the challenge of making the books balance. But when you've got such low levels of sales in London and such low transactions, anything you can do increasing the transactions will put more money in the coffers. So even if you reduced stamp duty for a year or halved it or whatever you did, if you get more than twice as many transactions, you get more money. And really, that's as simple as that for me. So that was disappointing. Yeah.
Yes, I think that it's a very difficult market. We understand that the government has inherited a very difficult. It's come into power at a really difficult time. We've had a lot of massive macro issues which have deflated the economy, and we know all of those, and we've rehearsed all of those arguments before. And I was hoping there would be something that would stimulate growth in the first time buyers market. And as you say, I haven't seen that. I wanted to pick up on that because this is the first time since like 45 that we haven't had any support for first time buyers. There's nothing there. There's no Myris, for those old enough to know that.
Yes.
But it was a real stimulant, wasn't it? It really,
and that all ended up with negative equity though. So
well, we had that double Myris, didn't we? About like 88, didn't we? And everybody
120% mortgages.
Yes, and everybody charged out, and then we had I think a readjustment as they call it. Yes, and everybody
readjusted.
Yes, but also interest rates at 15% didn't help, did they? I mean, and the Black Friday. And then we've had Help to Buy and all those sorts of things. And I wasn't a great fan of Help to Buy because I think the money just went through and it increased the price of the homes compared to the second-hand market. And I am a big champion of shared ownership. So I was interested that you said that because I think it is a really good product and it is a good way of getting on a step on the ladder. And I think there's lots of myths around that we kind of need to bust. I mean, one is about service charge, and I think that's a real issue, but it's not a shared ownership issue. It's a leasehold issue. And I think we need to be better at understanding what the costs are at the beginning so that people can enter the market knowing what those costs are. And maybe we need to factor them into the price of the property. I mean, we were talking a minute ago, weren't we, about homes at 250 grand with 5 grand service charge, which in effect is 60 grand capitalised up, and that's got to come off the price basically because there's nowhere else it can go, and we're not seeing that within our market. So I would like to see more support and more funding for shared ownership, and also a greater understanding of what the product is, because I hear people say, oh, it's not affordable, but it's based on income, so absolutely it is affordable, and we can structure it so it is. So I'd like to see some of that. But we haven't seen anything that's going to stimulate that first-time buyer market. I mean, it's slightly different in Slough, isn't it? Where I think there isn't the sludge in the market that you're seeing in London.
No, I mean, I think for us, it's the fact that it's just slightly cheaper. We've also seen the benefit, and again, this goes back to this importance of investing in infrastructure. The investment that went into Crossrail, Elizabeth Line, has definitely sustained that residential market. We've got a lot of sites as well, so people are able to come in and get those sites and start to move them forward. I mean, it's also the employment base for us as well. Heathrow, Slough Trading Estate, 35 data centres now. That all helps underpin both house prices and drive transactions. But there are major issues in the rental sector. I mean, part of our temporary accommodation problem is actually driven by landlords getting out of renting, either to sell because the retail market is still relatively strong, or people think, oh, it might go down, so I need to get out now. Concern around renters reform in terms of people thinking, well, I want to get rid of the people now because I don't want to be a landlord anymore. And again, this is the structural problem in the UK system, that so much of our private rented stock is rented by one-person bands, mom and pop businesses effectively. They're very volatile and very susceptible to change around mortgage rates and all that sort of stuff. So we're seeing a lot of people being evicted from private rented accommodation because either they can't afford a big rent hike, or the landlord wants to get out of renting or get somebody else in on a much higher rent, or do up the property and rent it at a higher level. So that's a real problem with that overheated southeastern London housing market. Longer term, that will start to adjust itself, because obviously once the renters reform legislation is all in place, then there's much tighter control on rent, so that will help us keep our TA expenditure down, so you won't be in this constant inflationary rental market. And also less people will be evicted, and it'll be much easier for us to support people in sustaining their existing tenancies, which is obviously the best route for us to keep people out of temporary accommodation. But then, as Danny said, there are all these other issues both in the rented sector, in flatted developments. Now you've got fire safety works costs driving up, service charges, which make a lot of rental accommodation, less affordable, and it's difficult again for people to buy into the market in flatted developments because of very high service charge costs. So, I think we do need to look again at, I've always been a supporter, and I'm sure people wince at this, of rent control, but that is one way of actually bottoming out a lot of this excessive expenditure we have to do through temporary accommodation, made in the short term prevent investment in the rental sector. I think longer term, we've got to look how we use fiscal measures to grow the rental sector and institutionalise it. Progress has been made, but it's stalled, unfortunately, I think.
So, Paul, again, we were talking just earlier about that, the change of the Tenants Act and some of the implications of that. I mean, I think it'd be useful if you go through some of the issues that are happening and what those implications are in the short term, even if in the long term it might sort things out a bit.
I think it's got a real danger of doing what the Building Safety Act inadvertently did. So they are both good ideas. And Pat's absolutely right. It needs more regulation. It needs sorting out. It was very landlord friendly, very challenging for tenants and people wanting to live in rented accommodation. Same way as the Building Safety Act was an incredibly well-intended act, but the consequences have been pretty desperate on the London market. One of the challenges earlier about, I keep going back to viability because that is the bedrock of the success of the sector in London, is houses need to sell. House prices do need minimal growth, not massive growth, but minimal growth, and we need to see a moving market. Now, if the bank of mum and dad or the mum and dad ownership of these PRS properties are going to leave that sector, and I think they will leave that sector, it's not going to do anything good to house prices. If anything, it's going to depress them in the short term. And one can argue whether that's a good thing or bad thing, but it's not when you're trying to build new things. It will become a more professional sector. I think it needs that for lots and lots of reasons. And I do think over time, a bit like the Building Safety Act, we'll get through it and we'll get it working and it will be a much more efficient process and place to be. But we do have a pretty challenging interim period as the Act comes in. And it really is pretty penal to what was there before, particularly for the landlords. So the short out tenancies previously, minimum of 6 months, 2 months notice either way. You can put rents up, you can change it, and lots of bad things around that. But now a tenant can come in day one, they can leave after 2 months. There is no penalty. They can challenge any rental increases, and the rental increases will only go up once they've been through the courts, and they can't be retrospectively applied. There is a huge risk for landlords when you've got fluctuating interest rates and fluctuating mortgage costs, that they find themselves in a very detrimental place, and it takes too long to sort out. Now, I think over time that will sort itself out, but there will definitely be 3, 4, 5 years of challenge around that. And I'll be interested to see what happens in that market in London. And I'm not, maybe there were too many, maybe they weren't well run. There were a lot of poor landlords, and that's not a good thing. But we are going to see a bit of turmoil until that settles down again.
I think it is interesting that the professionalisation of kind of market rent, because for some reason within this country we haven't had that, have we? It has been, as you say, mum and pop kind of accidental landlords or deliberate landlords with small scale, whereas most of Europe has kind of large scale rented sector with professional landlords. So maybe that'll be the kickstart with this, that we'll get a more professionalised service and a better service, and people who understand that.
And I can't tell whether it makes it more or less attractive to institutional investors in the long term, because in the short term, it gives them less movement around price increases or disposal or whatever. But in the long term, if that's what they're there to do, and once that's all thought through, it might make it a better place.
I think in the long term it will, because one of our challenges in the UK is that because the private rented sector is so poor, badly regulated, lots of poor landlords, either incompetent or corrupt, and put it pretty bluntly, that people don't want to rent, and therefore people who don't need to buy, or really, economically or for reasons of labour market mobility, probably are best advised not to buy, end up buying. And I think that, hopefully institutional landlords, so this is an opportunity to really build credibility in the rental sector. So as in most of Europe, renting is seen as a first choice housing option, rather than being very much the second one to buy. And our obsession with buying has distorted the market in lots of places. It distorts the supply that's given. It's one of these things that drives more small houses on plots which could take more homes. Has lots of other effects around the financing sector, ties a lot of income up in mortgage repayments, which is bad for the wider economy, and it makes labour market mobility in terms of people's ability to move around and change jobs harder as well. So, I think there's it's created a lot of pain in the short term, but hopefully this will be where the opportunities for government to back that up with some other measures that support the rental sector, and also support the building of more subsidised rented accommodation, which again is that is the long-term solution to housing supply. The housing bank is a good idea. In fact, local authorities can't apply for that, perverse in many ways, because if you look at when we delivered enough homes, it's been when local authorities have been building, and it's some really good examples of local authorities building really good quality homes over the last 10 or so years and at scale. And this reliance and this, essentially the thing that frustrates me, I suppose, with the budget, the Thatcherite orthodoxy around public housing and housing finance persists on, whether that's in the approach to home ownership, but very much in terms of relying on housing associations to deliver affordable housing, inverted commas, and also the way that housing in the UK is funded. We ought to be looking at seeing housing as an asset, not a liability in the Treasury's books. Do it the way the Dutch do it, where essentially investment in housing is counted as above the line, very much a positive in terms of state investment, and actually revalue our housing stock, council housing stock, which is grossly undervalued and limits our ability to borrow against it. And again, government could very easily change the sort of Thatcherite rules around local authority borrowing and running deficit budgets, for example. If you're borrowing to build homes, you should be able to run a deficit budget to do that, as any private company would be allowed to do. But we are constrained by this now very outdated approach to housing delivery and public funding.
I think there's three really good points that I kind of want to expand on there, and I'm really glad you brought them up. So one is about the local authorities not being allowed to access the cheaper borrowing, which just seems bizarre to me, given that the debt incumbent on local authorities is all owed to central government, and so they're stopping it. And it's it is, I think, that arcane kind of Thatcherite legacy of not wanting local authorities to build, not liking local authorities, not liking their independence, and a centralised way of looking at it and doing everything you can to limit what local authorities can do. And you're right, we absolutely need local authorities building at scale if we are ever to get to the kind of 1.5 million homes or deliver 350,000 homes a year, because we've never done it any other way. The market doesn't take more than about 200,000 homes a year. That's the scale that people can build at and people can sell at, and the rates are, and you'll know that.
Yeah.
And so we need to be building 150,000 homes a year. And housing associations cannot do that on their own. And absolutely, we need to change how we approach local authorities and get them building again. And we can do that. It's like we set up a whole series of red lines, which we don't have to. As you say, we can run deficits. I mean, you think about the cost of all that temporary accommodation. If we were flipping that into capital and you were just going out and Slough could then build thousands of homes, it wouldn't have to spend £33 million a year giving to small landlords. That's just money that delivers nothing. And I think and we need to be looking differently at how we do that. And I think it would have been nice when the budget said, actually, these are arcane rules. There are changes we can make. We can do things differently, and we're going to. And we are in a real crisis. There is a housing crisis, but it's structured, isn't it? Because it's been with us forever.
It's bizarre, really, Danny. I mean, we do a lot of work with some of the outer boroughs and the less wealthy boroughs, so Barking and Dagenham and Havering, etc. And they're in quite challenging financial time.
Yes.
And they're going cap in hand, year on year, but they're not allowed to borrow more. And they have got asset and they could borrow more in a very prudent way, and they're not allowed to borrow more. So, or borrow more at competitive rates. So it's like it's a self-created problem, a lot of that, and there is a way for.
Barking's a good example, though.
Yeah.
They borrowed £1 billion, and we built 5,000 homes. Barking has much less of a TA problem.
Yeah.
So
Exactly.
that if you can work around the rules, and you're allowed to work around the rules, and that's the model in terms of if local authorities were empowered to borrow more, possibly against the value of their existing stock, which is vastly undervalued, and say, if you said to everybody you must build 1,000 homes, you can do that against the value of your existing stock and future income.
I remember an old stat, and it may not be true anymore, but the average London local authority debt was £30,000 per home. Now, I'm not sure if that's true these days, but that's what it was. So if you think of your typical mortgage, it's so low geared compared to that. And I'm not sure if it's still that.
No, it's still drastically under geared. And again, the valuation of retained social housing stock in the books is ridiculously undervalued. It's nowhere near current. So if you were a private entity you'd be able to borrow against that. Much higher sums than the very paltry amounts you're allowed to run up. And the other issue, of course, is around in terms of councils and building council stock, is this the block on rental increases. So essentially, we're capped to inflation +1, which means you can't invest in the existing stock, and you certainly can't grow a program because you can't finance that on artificially capped rates. And rent convergence for HA is great, but that cap on local authorities needs to be taken off so that we can move our rents into a still be very subsidised and still very affordable, but we can actually move them a bit in line with the market and demand so that we can actually borrow more money against that as well.
And the bit I don't get on that at the moment, to make viability, my phrase of the day, but to make things work in London, the GLA is having to put in massive amounts of grant subsidy into schemes, which is just dead money. It's gone. Okay, we've got some homes, it's gone. But if they could borrow more, they wouldn't have to put as much in day one.
Well, if you borrowed at lower rates, then over that kind of 30, 50-year program, discounted cash flow, it would be a massive implication. And that's why it's just bizarre that they've stopped local authorities accessing the bank and those lower rates.
I guess the Treasury orthodoxy in terms of loan periods, interest rates, public borrowing, public valuation. You could look at, if you decided to rewrite the rule book effectively, you could free up a lot more money, and public money and private money, for investment in housing.
Well, sorry.
No, I just want to ask Pat something on that. Is that okay? So, Pat, if you'd written the budget and there was one thing you could do in relation to this borrowing, what would you do?
In relation to borrowing, I think it would be around allowing greater borrowing freedom for local authorities.
And it wouldn't cost anything, would it?
No.
Okay.
And ability to set, take off the cap on council tax, take off the cap on council rents, because those are the other two constraining factors.
And does it affect our sort of AAA rating as a country?
You know what I mean?
Our bonds.
I think we artificially depress our AAA rating because by undervaluing housing as public assets, I think we actually probably harm our rating.
Right.
The Dutch have a completely different way of valuing public housing stock than their AAA rating, probably a stronger economy in the UK.
They would need the Treasury to stop looking at housing as a negative on the balance sheet and look at it as a positive. And that would fundamentally change how we approach social housing and would free up huge amounts of borrowing, and it wouldn't cost any more.
And again, this goes back to our whole view of the housing market and Thatcher's legacy existing. This is very much the legacy of you should be a homeowner, that's good. If you're renting, you're second-class citizen. If you're renting off the state, you're a third-class citizen, and that's a residual form of housing for residual people. And we need to break away from that so that publicly owned housing is an equally valid choice with private renting or private ownership. They're all equally valid and all equally supported and can all be equally good, and they all have a different place in life cycle of individuals and everything else. Which we see everybody sitting in boxes. You're a homeowner, you're a renter, and if you should be a renter, you should be trying to become a homeowner, or you're a social housing tenant and you're at the bottom of the pile. And there's no expectation that either your rent will go up or you'll move or anything like that. So we create essentially stasis.
And I think what's interesting is we believe that's how it's always been, and this is a new orthodoxy. And there was a big push by Thatcher and those governments to make this a cultural change, because pre the 80s, affordable housing was a big part of the market, and it provided it stabilised the market, and we saw private sale going up, but not massively, and there were alternatives, and the growth was a sustainable growth rather than the massive hikes that we saw. but it allowed that structure within the market.
Well, the butcher, the baker, the candlestick maker, wasn't it? It was not multi-class, but a much less a much less sort of penal,
Yeah,
aura around it.
yeah.
And if you've got larger supply, then obviously more people are eligible. Our problem at the moment, to be eligible for the very limited pool of remaining,
you've got to be right at the bottom. Right,
you've got to have real profit.
Yeah.
You've got to be in multiple deprivation. I have people come to me say, "How long will I have to wait on the register?" And go, 10 years if you're lucky. Other people, you think the only way you will ever get a council house is by becoming over 65, and actually we've got a surplus of older people's accommodation because most people in that age band at the moment, they've either sorted themselves out in their existing housing tenants or have bought somewhere.
Yes, and so
we're grumpy old men, aren't we?
We remember Mrs. Thatcher, which shows our age.
But it's important because we're living with the legacies, aren't we? And everybody believes this is the only way. But pre-80s, there was a very different way of delivering homes and doing that, and how we looked at the borrowing. So I think these are constraints that we can change. So, Paul, I'm going to ask you the same question you just asked Pat.
No, thanks. I don't know the answer. No, I think for me, I don't know the answer, but we've got a government now that is supposedly pro growth.
Yeah,
right? They want to see the economy grows. There's more.
That's their major pledge, wasn't it?
That's their major pledge.
Power.
What we haven't seen, either in this budget or the last budget, or even some minimal policy about planning, etc., we're not seeing anything from me that stimulates growth and stimulates transaction and stimulates movement. So I would have liked to see something in very London centric. I know it's my bit of the business that stimulated that growth in London. And I don't think we saw anything to do that. If anything, in my mind, we're sort of further away from.
And would that be something to do with first-time buyers? Do you think that's where the stimulus was, or is it?
I agree with you. Help to Buy, one can argue whether that really was a great thing. I think when I look at our appraisals, it's the cost, it's the on cost. So we all talk about build cost inflation, which had a massive effect, but it's the on cost in London. It's the on cost of the high risk building legislation, the time it takes to get through that. It's the on cost of SIL and mayoral SIL, etc. It's the on cost of everything we do. It's got so expensive.
Green agenda as well.
Yeah, the green agenda. All good ideas, but it's just punishing that viability. And people will, investors, why aren't they investing in PRS in London? Because the numbers don't stack. It's a very binary point. The numbers don't stack. They are investing a lot outside London. In fact, they love the houses, don't they, Pat? There's a lot of good investment in private rented housing stock coming through outside London. Lloyd's Living, for example, Borough for good. But we've got to make it attractive to the markets, whatever the tenure is, whatever the tenure is. I think where we've been lucky and we are a bit protected as a business, we do a lot of contracting and a lot of development. And in Havering, for example, and Barking, we are doing more contracting with more affordable homes, but really that's because the numbers don't stack. It's not because we don't want to do the mixed tenure, So we really need to get somewhere where we are seeing the mixed tenure communities we want stacking, particularly in the lower value boroughs, because that's really challenging, isn't it?
Well, it's
a really good point on the screen about looking at something, not being too London centric. And I would argue that actually there's been there've been two good decisions for growth in London. DLR extension. Shame that Bakerloo line extension didn't come in there as well, because that's got more growth potential. Heathrow is also a good one, but again, shame that hasn't been part. Gatwick expansion, yes, also good, but we do need a proper aviation policy for the South East, which links Stansted, Luton, Heathrow, Southend into a proper approach to aviation growth. But one of the things that that the helpful planning reforms are good. They could go a little bit further. But we don't look at that area around the M25, where you've got places of real opportunity, lots of employment, but relatively low housing growth, very high levels of social disadvantage, whether that's Slough, Crawley, Basildon, Thurrock, Watford, all these places. That the needs that people need to step outside, and government needs to step outside that London boundary in terms of what holds those areas back that are essentially outside the city wall of the M25 or the Greater London boundary, because there's real potential there to deliver homes in a way which is far easier than doing it on an old Air Force base out in Lincolnshire, where you've got to build the infrastructure, and even if you can, then the people want to go there. You've got the existing infrastructure in the main, you've got existing communities and town centres. How do therefore we do more around, it's that new towns in old towns, and really maximise the growth of the suburban ring around London in terms of delivery of both lower density housing and good model. Again, the government should be investing in good models of densification for municipal housing and for private housing, which corrects some of those design problems of 60s and 70s developments, actually delivers homes at greater levels. So it's more ambition in that space. I think it's really important.
Okay, I'll read that question out because I think it is a good one. Is it time to abandon London and focus on lower density housing in commutable towns to avoid or minimise difficulties around service charging, building safety and affordability? And we did have earlier a question around service charges as well. And is that dampening the build to rent market and sales market as well?
So ironically, for the traditional house builders, that's a retrospective question because they have abandoned London. So being all the names that we know, the national names, the big businesses, they have abandoned London. We are barely seeing them in competition, in opportunities. There's some specialists, some good specialists that work in London, similar to us, but we're not seeing the investors in London that we used to see, either as house builders or as PRS. So I do think that's a real challenge. I think it's a real challenge. I think it's a great shame. And I think if I look at London, we do a lot of regeneration, and there's a massive demand for larger units, 3-4 bedrooms, because there's a demand for families, and families are leaving the areas, and the schools are. It's such a shame because you genuinely see the signs of decay, and the cost of that decay socially and environmentally is massive. And I think we've really got to think differently around what we want London to be or other large conurbations, because of course it's easier to go and build in a greenfield in Surrey. And it's probably less money wrapped up. You can build houses. You don't have the same peak depth that we see in our big high rises, etc. And they're probably more sellable at the moment because people want to garden in the countryside. It's interesting what Pat was saying about where he is now, because Pat's come from Barking, Pat's come from Ealing, understands London very well. And it does, and maybe you're putting a positive spin on it, Pat, but it does feel a bit easier in Slough.
It's never easy, but there are some opportunities. So that control over our own planning destiny is important. There's some other big losses in terms of not having access to GLA grant support and TFL and things like that. But there are some advantages in terms of ability to innovate and do things differently. Some of those charges. I do think one of the other issues is that and we need to look at the planning system and using the planning system more proactively. And house builders won't like this, and landowners won't like this, in terms of actually using the use clause in order to dampen the land value market. Because one of the problems I face all the time is vastly overvalued sites and landowner expectations, which are unrealistic in terms of what they think will go on there and what they think that somebody will pay for it. And that is a real dampener on development everywhere, effectively. And if you could say, right, now a local plan will say this is designated for rental housing, this is designated for affordable housing. This, you start to cap some of those land values and stop this land value speculation and the non-developing developer acquiring sites as well, because which they'll get planning with no intention of building it out, because they'll be looking to flip it on and hold that for another 2 years, then flip it, and probably somebody else will flip it. So, the market does fail in many ways in the UK, and this again is back to our over-reliance on a private sale model and a house builder-led model, with all due respect to house builders. We have very good ones, but we are over-reliant on that model as being the sole route of housing delivery, and a very market-focused approach in terms of state control of land value. And we are hampered in the UK, you go to Netherlands or Sweden, anywhere like much higher levels of state ownership of land, which can then be released in service plots or whatever to bring development forward, just as GLA do on Barking Riverside, for example. But I think there are other models that we need to look at, and we do need to be more ambitious rather than just saying, there's nothing for growth, and but we always go back to the old model.
I think the point you made is really key as well, is that the ask for affordable housing, particularly in London, because of the density that we're building at, is massive. And that needs to be addressed, and that's something that, again, that could have been addressed within the budget, and isn't, because, as you say, you're looking at mayoral sill, building regulation, a good thing but very costly, and then on top of that the green agenda, and then the tying up of cash and then gateways, which then tie up massive amounts of cash at gateway 2, and then gateway 3. I mean, just the whole of the cost of the delivery tied up, waiting for someone to tell you that what you've done is correct.
I might move to Cornwall, Danny.
So I can see I know why the house builders have moved out. It's easier, isn't it? It's much easier.
I agree, and I think what Pat said is interesting. In London, most of our work is with local authority partners on local authority land. They have a very mature approach to the value of that land because they would rather have affordable housing than cash, and I like that. That's why we do it. So they would want decent levels of affordable housing, recognising that their land value is zero or negative in some occasions without grant, because also it's brownfield. There's a lot of cost of prep and getting them ready and clear, etc. What's happened in London in the private market is just nothing's moving, because as Pat said, people think it's worth more than it is, or they're going to wait, or they're going to flip it, or they're going to wait to get down to 20% affordable, which it looks like it's happening. But it's just stalling. It's stalling because some of them pay a lot of money assembling that land, and they can't take the write down. And RPs are in the same place. It's not just developers. RPs that bought a lot of land in London have got land that they can't do much with because they can't develop it. They can't sell it.
Yes,
and it's sitting there not being built on.
Well, lots of RPs are now writing down those costs and then going to start again, and they absolutely have to.
Yeah.
Well, it's the point that you made earlier. Build costs have gone up 40%. And no one predicted that, and you couldn't have predicted that. So, lots of people say, "Oh, they overpaid for that site and this site." Well, everybody's overpaid. If you bought a site pre-pandemic, you paid too much because your build costs are so high now, and we've not had sales growth to compensate that. So we are in a really, really difficult market because of that.
And it's funny internally for us, we've always historically appraised on a cost value inflation link. So we always expect there to be a rough parallel. There's ups and downs between cost and value, and that's fallen apart now. So when we're trying to predict our appraisals going forward, it's so difficult because that's all been blown out the window, because you never would have appraised a 40% increase in costs and no increase in value.
A very good point.
I've got another question.
Yeah, this is the real. I think the real conundrum here, isn't it? And we have two great dishonesties in the UK housing system that we've always expected since T's time, that affordable housing will be delivered essentially through a planning tax, Section 106, which is a form of dishonesty in itself, because if you're going to have subsidised housing, there has to be a subsidy for it, and that subsidy has got to come from the state. Effectively, you can get some of it from the private sector and in the form of tax. That's fine. The other one is the use of housing benefit, essentially to fund big parts of the private rented sector in reality, but everything has been structured around the use of housing benefits at all. During the Blair years, we had very high levels of local housing allowance, which was great. It didn't cost us any money, but it had an inflationary effect in the private rented sector, and was also propping up actually council house finances, because you can increase the rent because it's largely paid by benefits. So we need to wean ourselves off both that current housing benefit system, but also this thing that you deliver all your affordable housing through the planning system, and essentially a planning tax. There's got to be a better grant rate. Whether that grant rate could be more tactically applied and grant could be more tactically used, so use it in those areas where you can get the greatest bang for your buck, but without having to deliver massive extra infrastructure. And this is interesting in terms of the new town development. And we have to do something around getting London moving, which may be about giving councils the ability to acquire more of these sites. These stalled sites, that local authorities acquire them and bring them forward with public money, because that will actually stimulate the market long term, and say painful possibly for the people being bought out, but that would get things going again. And that's a really positive state intervention in terms of sites people might have paid too much for. Well, here's some money, go away. We'll bring that forward and develop it, because actually the state or the local authority can afford to do that, which the private sector can't anymore. And moving some of those sites from people who are unrealistic value expectations into possibly different arrangements where someone's delivering it for a public body, but possibly as a private development.
So again, we're going back to changes in the orthodoxy of what local authorities and central government can do, how we approach debt, how we approach borrowing, how we look at housing as an asset, not as a negative impact. And so we do need to change that orthodoxy and thinking, if we are going to get out of this malaise that we're in, don't we? I think that you were saying, how can we get the market going again, I think that would stimulate some of that market, wouldn't it?
It would. And I think part of the, again, but we talk about deregulation, and all parties seem to talk about it these days, expecting it to save millions and billions of pounds.
Yeah, sure.
They get a big redundancy bill and it doesn't change anything, does it? So I do think the ability to borrow for local authorities is a massive one. And I think it's relatively cheap for the country and relatively low risk. You know, everything has a risk, relatively low risk. I also think 100% of nothing is nothing, you know, and we've got to have an attitude that if we want the economy to grow, there has to be some stimulus to encourage it to grow, wherever that comes from. And that's not about subsidy and grant. That's about reducing certain taxes to increase volume of activity. We can take a view on what that is, whether that's seal, whether that's stamp duty, wherever. Yeah. And it can be a holiday. It doesn't have to be forever, but get it moving. You know, get it, and then you get the economy moving, and then it grows, and then you get the benefits from that. But,
yeah, I must admit, I'd go for the reverse approach on that. To be honest, I think, you know, one of the missed opportunities of this budget was to put tax up actually, and then redirect that into investment in infrastructure, which you count housing as a form of infrastructure. Because and there's an interesting question on there about the SME contractors and things like that. You know, and I think one of the ways that actually could revitalise the house building sector again is if we were all slightly less driven around price, because essentially the contracting sector, if you look at the margins in the contracting sector, anyone from another country go, I don't know why people do this, you know, this is ridiculous, the margins they're working on. This is why we have these big failures, whether it's Carillion or anybody else. So we almost have to accept that, you know, we need to be in a position where we've got slightly more money in the system, particularly on that housing association local authority side, where you can afford to pay slightly more, better product, better managed and delivered, but push some more money into the contracting sector to build capacity there, and particularly around the, you know, the medium-sized ones who will do, you know, who will work for you on, you know, and do local schemes, etc., etc. And again, I think that, you know, also comes back in terms of, you know, I spent a lot when I was at Barking and Dagenham looking at off-site manufacturing. That's the other question in the chat. Huge potential there, but it just hasn't got off the ground at scale because of, you know, you need a large amount of capital, you need a large amount of inventory. You've got an uncertain market, regulatory market changing all the time. So you see a lot failures. And again, we ought to be reducing build costs through greater use of off-site manufacturing, the way they do in Sweden and lots of other places. But we've never really managed to make it work. It looked like we were at one point, and then it's all sort of reversed again.
If I just say what the two questions are, so people who aren't looking at the chat. So the first question is about, can we get more SME contractors, house builders into the market? It is a real issue within our market. I think it's the risk profiling that we have and the procurement process we have and the race to the bottom that we have that is causing that. But I'd be interested in your thoughts on that. Yeah. And then the other one is about offsite manufacturer. Why aren't we doing more on that? Is it dead in the water? So those are two kind of quite related about the structure and I for my two penneth worth, I think the design and build contract has driven a culture of risk transference probably where it shouldn't have transferred, and that has meant we've got a structural problem within the construction industry and a structural problem with approach to risk, and I think that needs to be looked at as well. But I'd welcome your thoughts on that.
There's quite a lot in that. Yeah, I mean, a couple really. As far as I'm a massive fan of SMEs, both in our supply chain and in our competition, to be honest. The thing about larger businesses, as you get bigger and you know, we're not that efficient on schemes that cost below about 30-40 million pounds to build. You know, there are better, more appropriate, fits for purpose businesses that should be building those schemes. I'll probably be killed for saying that, but it's the reality. We're very good at the big, larger schemes, the Gascoigne estates in Barking and Dagenham, you know what I mean? The schemes in Abbey Road in Camden, places like that, where they're big, tight, complex, you know, tall buildings, really, the majority of them. And there should be a massive market for that. And also there's lots and lots of smaller sites that are owned by local authorities, that should be into that market. And we do need to do more to make it more accessible. I agree with you on the procurement rules. It's very penal unless you've got a whole team of people bidding.
Well, what we see is the teams with good bidding
Exactly.
teams win the schemes.
Yeah,
and SMEs can't afford to have those really good bidding teams.
Agreed. Yeah. So it is a problem, and that does need addressing. I think it all started really with EU procurement, and that's where it got to. And we do have one of the very, very few positives of Brexit, and I'm not a Brexiteer, I'll be quite candid about that, is it should have given us the freedom to do something more about that around procurement and encouraging our smaller businesses.
And it hasn't changed at all.
Hasn't changed at all. No. So, that is a challenge. Offsite, I think offsite is brilliant. I think everything should be built offsite, and it should be the solution. The reality is, it's so many factors that make building unpredictable in terms of time. And so you very, very rarely know when it's going to start and when it's going to stop and when you're going to sell and when you're going to fill it up and etc. So if you think about it, you're making things in a factory without knowing when it's needed. And that's why most of them have gone bust, actually. So they've either made too many, not made enough, can't put the lead time, can't get the forward line. And we won't order a module until we know we're going to start, which is too late. And with the Health and Safety in the High Risk Building Act, that's made it even harder. So we can't even say we might need to book it into your factory next summer, because it might be the summer after.
Yeah.
So I think in London regen sites, they are so unpredictable time-wise, it's very, very difficult for modular to work. What we do a lot of, and I'm a massive fan of, is components, modular components. Bathrooms, service cupboards, do you know what I mean?
Yeah.
Roofs. You can go quite a long way with a bolt-on system that works. Having said that, we've got this modular offering of modular homes for temporary accommodation. That literally is you turn up and put it on a site and you have a brand new home. And that is a solution, but it doesn't fit neatly with our sort of long-term regeneration, urban environments. It's very good as a relatively short-term fix.
And I completely agree. I'm a big fan of offsite. I did a scheme with Peabody 20 years ago with a company which isn't with us anymore because of those reasons.
Yeah.
And it was just brilliant, and the quality was really good, the finish was good. But you're right, it's really hard to predict. And if you're basing it on a sales rate and you're building houses, even if it's in a field, if they don't sell, you don't want the next box, do you?
So Danny, when I first met you, I'm going back a bit now, I worked for the Housing Forum on the back of the Egan report, and the Egan report said we would not be building cars in muddy fields. Why do we build houses?
I remember that well.
And one of the drivers then was called MMC then, but it's the same thing, was modern methods of construction. And this is back in the last century, just put it that way. So the end of the last century. And then we saw Modernise or Die, then we saw M4. There's all the time. Everyone looks at it and logically it is the way forward. It's just incredibly difficult to make it happen without continuity of delivery, which is really tough.
Yes. Well, you wouldn't build loads and loads of cars unless you knew they were going to sell, would you?
Exactly.
And that's the point,
and that's the world market.
Yeah.
Well, you can if you're bigger, which is why Ford store thousands of them in Dagenham.
Yeah.
That's a bit mad.
Yes. Right. One of the other questions we got here is again about procurement, and I think that's someone said it's the gift that Brexit keeps giving it.
Yeah.
I mean, for me, I bang on all the time about procurement. I think we've got it completely wrong.
Agreed.
I mean, one of the things I don't understand is there is no reward for doing a good job in local authorities. Absolutely no reward. If people go the extra mile, reduce their profits, make it happen, make it work, what do they get? They get the chance to bid again for the next phase or the next phase, rather than saying, right, here, you've done a really good job, we can take a view on this. And I think that needs to change. There needs to be a reward for good behaviour. Because what you can do is just argue the toss, make it really difficult, bash it out, and you still get on the tender list,
But I mean, that's a frustration for most of us on the local authority side. Again, it comes back to this cultural thing about, we are deliberately hamstrung in many ways by government to make it harder for us to do things and give us less freedom. Yeah, I think we'd all like to be able to operate a much more dynamic market system where we've got far more choice, who we can go with. Don't have to necessarily go down some of these routes of, Worst one, of course, is competitive dialogue. No one wants to do that, unless you've got massive of money. But yeah, thinking back to the Building Schools for the Future, that would have been a marvellous programme, but it was completely hampered by the procurement process that government put on top of local authorities, which meant that most of us only managed to deliver 2 schools in the time we could have delivered 10. We'd just been left to get on with it. Now rules about what constitutes an activity and an undertaking just get in the way all the time, so that we're constantly pushed back to just doing land deals because it's simpler. You don't have to go through a complex procurement process, where actually maybe far better to go down a route of an off-market sale with someone who can bring the site forward. So it's frustrating for most of us in local authorities, but the way that we are structured is such that again there's this transference of power, which again goes back to Mrs. Thatcher in terms of so-called Section 151 officers and monitoring officers, who are generally people from the least ambitious and creative council people, like finance people and lawyers, who are given power over the rest of the organisation, politicians and other officers equally.
Not that you're bitter, Pat.
No, not. But that's that is the constraint, and that therefore gives local authorities a bad reputation in terms of being people to work with.
It's we've got 4 minutes left, so I think rather than keep you on, and thank you all for attending on a Friday and over your lunch hours, really appreciate that. I think I'll spend kind of the last 4 minutes just asking both of you to sum up what you think we've got from today, and then I will finish that off. I think the things that I've taken from today is that we do need to be more flexible with local authorities and the regulations on that. I think we need to be changing our thinking around the orthodoxy in terms of investment in social housing, and it needs to be seen as infrastructure, not as a burden and a debt. And I think that's really important. And over to you, Paul. What's the big takeaway for you today?
Well, my big takeaway of the week was Chelsea beating Barcelona 3-0. But I thought it would be the budget, and it wasn't. And I think it was a flat budget, to be honest with you. And I think it's a great shame, because I do think there was opportunity to do things that would mean things could happen in their tenancy, in Labour's tenancy, that would make a difference. And I think it's now year 2, it's then year 3 next year, and it's harder and harder to see the
running out of time, aren't they?
Yeah, running out of time. So I still don't think we've got this parallel of we want to grow the economy and the fiscal policy that we're doing at the moment. And I think for things to change, we've got to either take Pat's view, which is increase taxes, invest more in infrastructure and housing, or probably my view, which is reduce some houses and let the market invest more in infrastructure and housing. But both would deliver the same results, actually.
And Pat, what's your takeaway for the budget?
Three old men whittering on about the past, but apart from that, I mean, I think it's that continuing of the same orthodoxy. Not a bad budget and some good stuff in it, but a lost opportunity in terms of this could have been, the chance to reset the dial, adopt a much more European approach to public finances and certainly to housing delivery. And it's sort of, it's okay, but it's what might have been, I think,
Yes, I think we all agree that it's a really lost opportunity, whether it's through stimulus or through tax. And I think they set up a position where they could have increased taxes. I think we would have all accepted 2% on, and I think they lost their bottle, didn't they? And they lost their nerve, and they didn't do that. And I think that would have been a great move, because that would have given them the freedom to be more creative and really kind of stimulate growth. And we all know kind of, what is it? Every pound spent on housing delivers £3 back into the economy. I mean, it's just a no-brainer that we should be investing in affordable housing and getting the market going again for the private sector, because we have to have both. We need homes for everybody. We need homes for people in the affordable sector, and we need private sale. We can't have one without the other, and that's really, really important. So I think we're all pretty much agreed it was a lost opportunity here. But maybe there'll be some other windfalls along the way. I mean, they're talking about rent conversions coming out in January. Hopefully there'll be £1, £2 or £3, and that will help not the local authorities, but it really will help RPs, particularly the older RPs and some of the stock transfer RPs who rents have really lagged behind, and that will put billions back into it, and hopefully that will then move into building new homes. So it's 2:30, so we're going to end there now. I'd like to thank Pat and thank Paul.
Thank you.
And thank you all for giving up your lunchtime to listen to, as we said, three old men wittering on.
Cheers.
Bye.
Thanks, buddy.